All right, so when you first look at Japan's construction market, it seems like it's absolutely on fire. We're talking about a boom of like historic proportions. But, and this is a big but, if you peek just under the surface, that giant headline number, it's hiding a huge, and I mean huge transformation going on behind the scenes. So let's get into it.
So check out this number. This is what's got everyone talking. The forecast says that by fiscal year 2026, construction investment in Japan is going to soar past 80 trillion yen. That is just a mind-boggling amount of money. It's almost hard to wrap your head around. And that really brings us to the core question here. You see a number that big and you think, wow, the market must be booming, right? But is it really a sign of healthy demand? Or is that giant number just a symptom of something totally different? A massive shift that's shaking up the entire Japanese real estate industry from the ground up. Because here's the thing, that 80 trillion yen, it's not really a story about tons of new buildings popping up everywhere. The real reason that number is so high is, well, it's a lot more complicated than you'd think. And this is where we get to the central paradox of this whole situation. What we're seeing is this great divergence. You've got two major trends that are literally pulling in opposite directions. And you've got to understand this split to get what's really going on. Okay, so check this out. It couldn't be clearer. On one hand, the amount of money being poured into construction is just shooting up. But on the other hand, the actual amount of stuff being built, the physical volume, is going down. So how on earth is that possible? How can you spend more money to build less? Well, the answer in 2 words is cost inflation. It's really not about more demand. It's just about everything getting way more expensive. We're talking raw materials, labor, you name it, the prices are just constantly climbing. So that project that cost a certain amount a few years back, today it costs a lot more, which pumps up that total investment number without a single extra nail being hammered. And the housing market is a perfect example of this in action. Take a look. For fiscal year 2025, they're expecting the number of new homes being started to actually drop by more than 10%. But get this, the total amount of money being invested in housing, it's going to stay pretty much flat. How? Because the price for each individual home has shot up so much that it completely offsets the fact that they're building fewer of them. And this has a real-world impact. It's not just numbers on a chart. What it means is that for the average home buyer, the dream of a new condo is just getting out of reach. Prices are soaring, and people are hitting a financial wall. So what do? They're forced to look elsewhere, maybe at detached houses, or what we're seeing more and more, the market for existing used condos. Okay, so if building new stuff is getting too pricey and isn't as profitable, where is all that investment money going? Because it has to go somewhere, right? So yeah, let's follow the money. Look, to put it simply, for a lot of new construction projects, the math just doesn't work anymore. Whether you're talking about new apartment buildings, logistics hubs, or retail stores, the costs are so high from start to finish that they're just not profitable. It's becoming a bad bet. So this is where the smart money is heading. Instead of building brand new from the ground up, all that capital is flooding into repairs and renovations. It's all about revitalizing the massive number of buildings Japan already has. You could say this is the new frontier for real estate investors. And this table here really lays it all out. Nice and simple. The market for brand new condos, yeah, that's stalling out. The market for existing, older homes, that's in high demand as people hunt for value. But the real explosion, the area that's just taken off like a rocket, it's building renovations. And I want to be clear, this is not some small niche trend. We're talking about a major shift. The forecast for fiscal 2025 shows that investment just in building repairs is on track to jump by more than 10%. That's a huge signal that shows you exactly where the market is pivoting. But wait, there's one more massive piece to this puzzle. And honestly, this could be the biggest one yet. It's not just about high construction costs. The entire financial landscape, the very foundation the market has been built on for years, is about to go through a dramatic change. 1%. That's the number everyone needs to be watching now. Some forecasts are actually floating a scenario where Japan's key interest rate could hit 1% by the end of fiscal 2026. Now, for an economy that has basically lived with zero interest rates for decades, 1% is a seismic shift. It changes everything. So think about it. you've got this 1-2 punch, crazy high construction costs hitting at the exact same time as rising interest rates, which means it costs more to borrow money. That combination is a total game changer. All those business models that depended on cheap money and cheap materials to work, well, they are about to face a serious reality check.
And whenever you have a shift this big, you're gonna have winners and losers. It's just inevitable. Not every company is built to survive this kind of change. So the big question is, who's gonna come out on top and who's at risk of getting pushed out of the market entirely?
So on one side, you've got the companies that are really going to struggle, the ones whose whole strategy relied on low costs, or the ones that gambled big on expensive land thinking prices would just keep going up forever. They're in trouble. But on the other side, you've got the new leaders. These are the companies with deep pockets, a strong capital base, and, this is the key part, the know-how to take an old building and make it valuable again. And this quote from our source material really just nails it. The future isn't for everybody. It belongs to the players with serious cash, the ones who are savvy enough to spot an opportunity in an old building, a diamond in the rough, and have the vision to reinvent it for today's market. So that kind of leaves us with one big final question to think about. We started this whole thing talking about an 80 trillion yen boom, but we ended up in a world of renovation and reinvention. And it really makes you wonder, is what's happening in Japan just a local story, or is it maybe a sneak peek of the future for real estate everywhere? A future where maybe the real money isn't in building something new, but in finding brilliant ways to reinvent what we already have.